Welcome to the Roy Morgan Weekly Update. And this week, spring might be here, but it's not all good news as cost of living concerns continue to bite and the coming referendum looks set to divide Australians. Let's start with a look at the results from Roy Morgan's latest survey on The Voice. In December last year, Australians supported establishing an Aboriginal and Torres Strait Islander voice to Parliament, known by most as The Voice. Roy Morgan research showed 53% would say yes. In mid-April and late May, support had dropped to 46%. And in the latest Roy Morgan online survey of Australians, just last week, only 39% said they'd vote yes. That's down 7% since late May. The pendulum has swung. Now more Australians say they'll vote no than yes. 44% to 39%, and 17% are still undecided. And traditionally we find in referendums the undecided vote no. Now the most important demographic break for any referendum is the result by state. That's because for any referendum to pass in Australia, a majority of voters nationally, as well as a majority of voters in at least 4 Australian states, must vote yes to the change. This double hurdle is a key reason that not many referendums have passed in Australian history. Now, Roy Morgan's latest survey shows only one state, Tasmania, now has a majority in support of The Voice. That's 56%. More Victorians say yes than no, 46% compared to 42% in Victoria. In every other state, the no's outweigh the yeses. At these levels of support, with voting starting next week, it's almost impossible to see a way for the Yes campaign to turn around the sentiment of Australians, especially in the critical 3 states. Looking now at support for The Voice by party affiliation, it shows a pretty similar pattern to May. Clear majorities of ALP and Green supporters say they'll vote yes to The Voice, and large majorities of LNP supporters and supporters of One Nation and other parties say they'll vote no. People who support independence, including Teal independents, split right down the middle on the question. 42% say they'll vote yes, and 42% say they'll vote no. The overall sentiment from these results is that this referendum is set to be rejected by the Australian people in 3 weeks. And if the referendum is rejected as expected, this will prove once again how important it is to get bipartisan support for any proposal to be taken to the people via a referendum. Now, some good news this week is the finding of the Employment White Paper that suggests the definitions of employment and unemployment need to be redefined to properly reflect the labour market of today. Now, as most of you would know, Roy Morgan has consistently measured far higher levels of unemployment and underemployment than the official ABS figures over the last 15 years. That's really given our broader definition that we use to measure unemployment. If someone who isn't working is looking for a job, we consider that person unemployed. And if someone's working part-time but wants to work more hours, we consider that person to be underemployed. The labour market today is much more nuanced than in the 1940s, just after the war, when the official measures were created in the US and Europe. That's 3/4 of a century ago. A lot's changed. So the government's move to redefine how official unemployment and underemployment estimates are calculated is a welcome step in the right direction. We'll have Roy Morgan's latest unemployment and underemployment figures for September to bring to you next week. And now to the key weekly indicators. The latest Roy Morgan poll shows ALP support unchanged at 54%, with the coalition on 46% on a 2-party preferred basis. But Australians now think the country is going in the wrong direction. 53.5% of them think that. And that's leading to a sharp fall in government confidence this week, down 12.5 points to 79.5. Consumer confidence was down 3.4 points to 76.4 this week, mostly driven by Australians' concerns about the economy and their personal finances in the next 12 months. The ANZ Roy Morgan Consumer Confidence has now spent a record 30 weeks in recessionary risk territory, below the mark of 80, equivalent to 7 months at this level. Inflation expectations were up 0.5% to 5.4% this week, significantly reversing last week's drop. Australians are now expecting annual inflation to be 5.4% over the next 2 years, in line with the average inflation expectations we've seen so far in 2023. Now, a likely cause of the drop in confidence and the spike in inflation expectations is the increase in the average retail petrol price, increasing by almost 7 cents per litre last week to $2.11, the highest retail petrol prices for over a year, at least since July 2022. Over the last 2 months, petrol prices have increased by nearly 40 cents per litre and have now been above $2 for 6 straight weeks, the first time this has ever happened. If petrol prices stay at these high levels, that will continue to put inflationary pressures into the economy and may lead the Reserve Bank to consider further interest rate increases in the months ahead. And that's a wrap for this week. Thanks for listening today, and I look forward to bringing you the latest data on consumer confidence, inflation expectations, voting intention, and unemployment next week. Take care. We'll see you next Tuesday.